Welcome back to Book Summaries channel. If you've ever felt overwhelmed by the complex world of stocks, bonds, and Wall Street jargon, today's video is going to be a breath of fresh air. We are breaking down The Simple Path to Wealth by J.L. Collins, a book that demystifies investing and provides a straightforward roadmap to financial independence. J.L. Collins starts with a powerful message. Debt is the single most significant barrier to building wealth. He describes debt as a form of modern-day slavery that ties you to a job you may hate and prevents you from making bold life choices. To walk the simple path, you must view debt as an emergency and eliminate it with extreme prejudice. He distinguishes between good and bad debt, but concludes that ultimately, all debt carries a high opportunity cost. If you are paying interest to someone else, that is money that isn't working for you. The author suggests that most people live beyond their means to impress others, which leads to a cycle of borrowing. To break free, you must cultivate a mindset that values freedom over material possessions. Once you are debt-free, you gain the psychological power to start investing aggressively. This chapter serves as the vital foundation for everything that follows in the book. You cannot build a stable financial house on a foundation of high-interest consumer debt. This chapter focuses on the most fundamental rule of wealth creation, spending less than you earn and investing the difference. Collins argues that wealth is not about what you earn, but what you keep. He encourages readers to shift their perspective from seeing money as a tool for consumption to seeing it as a tool for freedom. High earners can still be poor if their lifestyle inflates as fast as their salary. The author introduces the concept of FU money, which is a stash of cash large enough to allow you to walk away from a bad situation. This financial cushion provides peace of mind and the ability to say no to things that don't align with your values. Investing should not be viewed as a chore, but as buying your future self time and autonomy. The key is to automate your savings so that you never even see the money you are investing. Discipline in the early years yields exponential rewards in the later years. By living a modest life now, you ensure a lavishly free life later. Collins demystifies the stock market, describing it as the single most effective tool for building wealth over time. He acknowledges that the market is volatile and scary in the short term, but consistently trends upward in the long term. He explains that when you buy stocks, you are buying a piece of the world's greatest companies and their future earnings. The market is not a gambling den. It is a mirror of human productivity and innovation. Investors fail not because the market is rigged, but because they succumb to fear and greed. Market crashes are a natural part of the process and should be viewed as sales rather than disasters. The author stresses that you should never try to time the market, as even the professionals fail at this. Instead, you should embrace the volatility and stay the course. Over decades, the stock market has always rewarded the patient investor. Understanding this long-term reality is essential for maintaining your composure during downturns. The core of Collins's investment philosophy is the use of low-cost, broad-based index funds. He specifically recommends the Vanguard Total Stock Market Index Fund, VTSAX, as the only tool most people need. Index funds allow you to own a tiny slice of every public company in the market, providing instant diversification. This approach outperforms the vast majority of actively managed funds because it has lower fees and doesn't rely on human guesswork. Picking individual stocks is a fool's errand that most professionals cannot do consistently. By owning the entire market, you are guaranteed to capture all the winners while the losers eventually fade away. The author highlights that high fees are a silent killer of wealth, eating away at your compounding interest over decades. Indexing is a set-it-and-forget-it strategy that frees you from the stress of watching the news. It is simple, effective, and requires zero specialized knowledge to execute. Simplicity is actually an advantage in the investing world. This chapter explores how your investment strategy should change based on which stage of life you are in. During the wealth accumulation phase, Collins recommends being 100% in stocks to maximize growth. At this stage, you have time on your side to weather any market storms, and volatility is your friend. As you move toward the wealth preservation phase, you might introduce bonds to smooth out the ride. Bonds provide income and stability, acting as a buffer when the stock market dips. However, the author warns against being too conservative too early, as inflation will erode your purchasing power. He explains that your risk tolerance is often something you only discover during a real market crash. The goal of asset allocation is to find a balance that allows you to sleep at night without sacrificing too much growth. Collins emphasizes that your primary engine for wealth will always be stocks. Bonds are merely the shock absorbers for the portfolio. Your allocation should be dictated by your needs and your psychological fortitude. Collins introduces the concept of the 4% rule, which helps determine when you have enough money to retire. Based on historical data, if you withdraw 4% of your portfolio annually, adjusted for inflation, your money is highly likely to last forever. This means your financial independence number is roughly 25 times your annual expenses. Once you hit this number, work becomes optional because your investments generate enough income to cover your life. The author encourages readers to keep their expenses low to reach this goal faster. Achieving financial independence doesn't mean you stop working. It means you only do work that you find meaningful. It provides the ultimate security in an uncertain world. This chapter provides a clear, mathematical target for the reader's financial journey. Knowing your number turns a vague dream into a concrete goal. It is the finish line of the simple path. Navigating the world of IRAs, 401(k), and taxable accounts can be daunting, but Collins keeps it simple. He explains that tax-advantaged accounts are gifts from the government that should be utilized to their full extent. You should prioritize your employer's 401(k) match, as that is an immediate 100% return on your money. He compares traditional versus Roth accounts, explaining that the best choice depends on your current tax bracket versus your expected future bracket. Even if these accounts feel complex, the underlying investment, VTSAX, remains the same. The author advises keeping your tax life as simple as possible to avoid errors and high accounting fees. He also touches on tax loss harvesting as a way to turn market losses into tax savings. By understanding the basic rules of these accounts, you can shield a significant portion of your wealth from Uncle Sam. The goal is to maximize your after-tax returns over the long haul. Efficiency in taxes can shave years off your working life. In the concluding section, Collins reminds the reader that money is merely a means to an end, not the end itself. The goal of the simple path is to have a life of freedom, options, and peace. He warns against lifestyle creep, where you increase your spending as your income grows, keeping you on the hedonic treadmill. He shares personal stories and letters to his daughter to illustrate that the principles of wealth are timeless and universal. The path is simple, but it is not always easy because it requires against-the-grain discipline. You must be willing to ignore the noise of the media and the opinions of experts. Trust in the power of compounding and the resilience of the economy. Wealth gives you the ability to spend your time with the people you love and on the causes you care about. Collins encourages readers to start now, regardless of their age or current situation. The best time to plant a tree was 20 years ago. The second best time is today. Stay the course and enjoy the freedom that comes with the simple path.